Start your day with It's the Business. Here's Phil Dobbie.
Well, today, Andy Haldane for the Bank of England has been saying he hopes the economy will rebound quickly later this year as we all go on a bit of a spending splurge with all that money we've saved up. But maybe not. Finance expert Rachel Springall says this pandemic has shifted our attitude towards savings.
It's caused people to really think about, do they actually have a safety net? And if they don't, why don't they have one? Why have they never thought about it before it's too late?
So we might spend a bit more, but we'll also be looking at building up a bigger buffer. Does that mean a slower recovery? And what about the lockdown measures? MPs yesterday voted on the extension of coronavirus laws.
We all want these next few months to be a one-way route to freedom.
But for now, MPs want the power to limit that freedom at least until September.
Eyes to the right, 484. The nose to the left, 76. So the eyes have it. The eyes have it.
Oh, you know what? I do miss John Bercow. Order! Plus, Europe is getting a bit more determined on vaccine export controls, and a British company that listed on the NASDAQ yesterday, and it's worth $13 billion, and there's every chance you'd never heard of it. It's Friday, the 26th of March, 2021. Good morning.
And now, it's the business, making sense of it all with Phil Dobbie.
There are today just over 5,000 people in hospital with COVID. At the peak, just 2 months ago, there were just under 5,000 new admissions with COVID each day. Deaths are now at the lowest point since October, and they're down 94% since the peak. And the research published today shows that our vaccination programme has already saved the lives of over 6,000 people across the UK up to the end of February.
Matt Hancock yesterday at the onset of the government's debate on the extension of the coronavirus laws. And now it's going to be there for longer, which is it's going to take longer for us to get out of it, which is why Parliament voted to continue with these laws till September. The laws that lets the government decide who you can see, where you can shop, when you can go out. Basically, it's autocracy, isn't it, really, which is fine when we need it. Let's just hope in September they don't extend it for another 6 months, although ministers are saying that they are not ruling that out. This might continue through next winter. But the majority of MPs voted in favour of this extension. 76 voted against it, against continuing these laws. 76, most of those will actually be Tory rebels. We know one of them was Jeremy Corbyn, but possibly he was the only one from the Labour side of the chamber. All the rest, Tory rebels. But it changes a bit on Monday. Let's look on the bright side. The rule of 6 applies again. So outdoors, you can have another household round to sit on the patio. That's a step forward, isn't it? And the weather forecast for Monday is looking like it's going to be quite good. Just a bit of a shame that our outdoor pizza oven is not going to have arrived by then, but maybe a day to crank up the barbecue on Monday. Have another household round. Now, 3 in 10 adults in the UK think that life will return to normal in 6 months or less. In the latest numbers out from the Office of National Statistics, that, of course, 3 in 10. That means most of us, 7 out of 10, don't think life will return to normal in 6 months. 2 in 10 reckon it's actually going to take more than a year for life to return to normal. I think I might be one of those two. What about you? 94% of us have had or will have a vaccine if it's offered to us. That's actually one of the highest ratios in the world. That's going to help us. But there's new data out this morning from the Office of National Statistics. So we'll see if our optimism on how long it's all going to take, or our pessimism is probably a better word, given that most of us think it's going to take a long time. We'll see if that attitude has shifted with those numbers out today. I suspect more will see that it's going to take longer, given the potential slowdown in the vaccine rollout and the rising infections that we're seeing in Europe right now. Some numbers out yesterday morning, though, for the week up to the 18th of March, our aggregate spending on debit and credit cards is still 19% down on where it was in February last year, before the pandemic really started. At its worst, it was 30% down in the midst of the first lockdown, but we've still got an almost 20% reduction. That's still a lot, isn't it? Will it bounce back? That's the big question. We'll have more on that with Rachel Springall a little later on the podcast. Now, I know it's good to know that Ed Milliband has been listening to us on It's the Business, and clearly he has, because a few weeks ago we talked about the prohibition on new petrol and diesel cars being sold in Britain after 2030. But other than that, what is the government's plan? they've left themselves open on this because they haven't actually got a plan. So they're letting Labour's Ed Milliband fill the gap, which he did across a lot of media yesterday. Here he is on Good Morning Britain, for example.
What I'm saying today is we need an electric car revolution, but it's got to benefit consumers and it's got to benefit manufacturers and not just the richest. And at the moment, the government's announced the ban, the 2030 ban, but it's not stepping up and taking the bold action necessary to make this fair. Now, what does that mean? What are we calling for? Interest-free loans, long-term interest-free loans for consumers so that we can expand access, not just to the richest. A scrappage scheme so that people can trade in their old cars for electric cars. And crucially, and this is a global race, help for our manufacturers to build the gigafactories, the battery factories that are absolutely essential if we're going to tackle our car industry. You know, I believe that the climate transition can create a better country, but it's only going to happen with bold government action. We're not seeing it at the moment. Government needs to step up.
I presume you've got one.
I haven't yet. It's a work in progress.
Practice what you preach.
It's a work in progress. We're actually on our way to buying one before lockdown. It is going to happen, I promise you. I have bought an electric bike, but it's on its way.
One electric bike, that is just cheating, isn't it? But look, I don't think I'm too concerned about that fact he hasn't got an electric car yet. The real issue is, as we covered on this podcast weeks ago, is the number of electric charging stations. If we were to replace all the cars, all the petrol cars with electric cars, there is a massive number, a multiple of the numbers that currently exist today of charging stations that we would need. And nobody seems to be addressing that. And we need to adjust our homes as well. So we've got to have a socket out the front or in our garage so we can charge it up without running an extension cable through the downstairs window. There's a lot that has to happen. And really, we're not seeing that from Labour either. With Ed, with his electric bike. I mean, you live in London. There are no hills, Ed Milliband, unless you're making it out, beyond Headley and doing a real bike ride and going into the South Downs. Come on, show us what you're made of, Ed Milliband. And speaking of electric cars, as we get ready for the Deliveroo IPO, which could be the biggest IPO in the UK of all time, £12 billion is the expected price tag. What about this? There's a London-based electric van maker that did rather well listing on the NASDAQ in the US yesterday. The company is called Arrival. They make electric vans and buses. That's their thing. They haven't actually sold any yet, but it's a UK company. They say their first vans will go on sale in the last few months of this year. They're also looking at buses as well, as they say. They wanted to raise capital so they could ramp up the speed of the delivery of their vans and build up their network of what they're calling micro factories, so smaller production facilities which are closer to the market. That's interesting in itself, isn't it? Well, they were valued back in November at being worth $5.4 billion. This company, Alphabet, who I guarantee until yesterday you'd never heard of them, had you? But they were worth $5.4 billion back then. The listing was actually through one of, what are called these SPACs, these special purpose acquisition companies. So these are basically shell companies, they're empty companies that list, raise a bit of capital and then go out looking for something that they can actually turn into something profitable. So they merge with entities. Sometimes they take over entities, sometimes they merge. So they merged with Arrival. So Arrival was worth $5.4 billion just a few months ago. It listed yesterday. It's now worth $13 billion. When it listed on the NASDAQ yesterday. The share price went down a little bit after it had listed, but then everything went down on the NASDAQ yesterday. So there we are. A good British company doing well with a bit of British ingenuity. Very happy about that. And so it shows that, we are doing some good stuff in this country. A lot of people are getting hurt, by the way, by investing in shares. We're going to be talking more about that on Monday morning with Rodney Hobson. There's a lot of new entrants, retail investors who are getting into the markets because they've had a bit more time, perhaps looking for quick returns, which don't always happen. We're going to look at that with Rodney on Monday morning, but I quite enjoy listening to Jim Cramer on MSNBC. Here he is yesterday talking about how people are getting into the share market and then hanging on rather than selling the gains.
Someone just mentions an incredibly speculative stock. It's up 50% and says, can you believe this, Jim? You don't like speculation. And I immediately respond by saying, what a great time to sell. Up 50%. Ring the register. That's a great gain. And there are a lot of people who don't understand what a great gain is. A lot of people don't understand that there is no gain unless it's taken. And they think that someone like me who says take the gain is somehow heretical or working for hedge funds masters, as if I'm some sort of puppet. And I've been saying the same thing since 79. So maybe what people ought to realize is that they're wrong and I'm right. Because mine is common sense. I mean, I'm trying to keep people from what happened in previous bear markets, which is that they lost their gains. And I don't want that to happen.
And so this is a question I might ask Rodney on Monday when he joins me on the podcast. I wonder whether all these new people who are out buying shares because they've got a bit more cash, there's apps available for them to do that, so they're new to the share market, and there's a lot of interest in it right now as well. I wonder whether these people putting the effort into choosing stocks have found maintaining a portfolio is actually quite time consuming. So they're putting all the effort into buying stuff, but not putting much effort into selling stuff. So they do the buying, they see the stocks rise, but now they're also seeing stocks fall. They're getting disappointed because they didn't sell on the gain. So that's something we might discuss on Monday. Of course, the alternative is to take the longer term view and accept the fact that the prices are going to fall, and then they'll probably go up again. Meanwhile, the row over vaccines isn't going away. In fact, if anything, it got worse yesterday. Ursula von der Leyen from the European community is saying that the AstraZeneca company has to catch up with its contract to the European states before it can engage again in exporting vaccines. She says we want to explain to our European citizens that they can get their fair share. So does that mean that we will have to wait till they catch up? I mean, they are on 13% of the population of Europe right now. We are on at least 45%. So does that mean we have to wait till they vaccinate 45% of the population? That basically means from 13 to 45%. That means vaccinating a third of the population of Europe between now and when they'll actually let us get more exports from Europe. That is about 150 million people before they start to export to us again. That's not going to go down too well, is it? And it will also significantly delay the speed of our recovery, and that could potentially leave us open to new strains of the vaccine as well. Imagine our attitude towards the European Union if all of this delay means that we get new strains of the virus that sees our infection numbers rise, and we have a winter next year like the winter we've just been through, and all of that because of delayed vaccine deliveries thanks to the European Union. There's something else that might slow our speed of recovery, and that's how quickly we return to spending the way we did before. Now, I've mentioned several times on the podcast that quote from the Bank of England's Andy Haldane, their chief economist, a quote which, I suspect he might actually regret this with the passage of time. He said that the economy will return like a coiled spring because as we return to normal, we will unleash the latent savings that has been built up during the lockdown. For those who managed to keep their jobs and kept earning but could put a little bit away. This presumably is why we think we don't need the sort of stimulus that they've been putting out in the United States, the $1,400 paid into almost everyone's bank account over there. We don't need it here because our chief economist of the Bank of England thinks that we're going to dip into our savings, and that's going to have the same effect. But will we spend like crazy? Or will we just hang on to our money? So public savings in the UK peaked in the last quarter of last year at almost £207 billion. That is 18% higher than the year before. But you know what? It's already starting to unwind. It was down to less than $202 billion. So we got a 2.5% drop in just a couple of months with the economy not growing. So it seems like we're dipping into our savings just to get by. That's what's happening now. So will we actually dip into them further to get spending? Let's see what finance expert Rachel Springall thinks from moneyfacts.co.uk. You've been looking at some research that suggests actually maybe, just maybe, Andy Haldane is wrong. Many of us have been saving, but more of us are actually not wanting to spend it. We're wanting to hang on to it.
Yes, indeed, Phil. Yeah, there was a survey out by Ford Money, and interestingly, over 3/4, which is 78% of 18 to 34-year-olds, say that older relatives and members of their community have shaped their savings financial habits. Planning preparation has become essential, and a third of under 35 said that the biggest lesson learned in 2020 was to save more in case of unexpected events. And again, a lot of people have the assumption that the younger demographic don't really save, but I feel that the last 12 months has just changed the mindset of not just young people, but everyone across the country when it comes to saving.
Is that because they're worried about the future, or is it because they're thinking, no, now is the time? We've got a bit of a kickstart here, so maybe this is an opportunity to save for a house, or maybe older people are saving to do up the house? Is it, or is it a combination of all of those? So I suspect it's a bit of each, isn't it?
Yeah, I feel it's a combination. Again, you're going to have people that are optimistic, and again, almost half of respondents to this Ford Money survey stated that they were actually confident about the financial future in 2021. Whereas also you're going to have people on the flip side who have been unprecedentedly affected by the coronavirus and the financial impact it has caused, and are still trying to work things out.
How many are saying they're confident about the financial?
45%.
Wow. Gee, that's their own personal financial future. So they don't really have, and that's it, isn't it? Because, that's almost half. Almost half of us have sailed through this thing without any concerns whatsoever. We've kept our jobs, and we actually feel better because we're not spending money in ways that we did before. So this is saying that we're going to carry on in that with that sort of behaviour, is it?
I think for the last 12 months, it has definitely changed the mindset. So I feel like in the first lockdown, people would have been affected very differently to the second. I feel people may be a little bit more relaxed about spending money as we look towards the roadmap ending and people getting out of lockdown. But I feel it's going to leave not necessarily, a scar on some people in the way that they see their money and the way that they feel that they can spend and save over the future. I think it's given people a lot of time to think about their future and ultimately save a little bit often and regularly, and just ensure that they've got something to cover the next 3 to 6 months of essential outgoings. I think that's what's the most important thing. It's caused people to really think about, do they actually have a safety net? And if they don't, why don't they have one? Why have they never thought about it before it's too late?
Yeah. Do we know how much bigger? Because I think most people have always had some sort of safety net, even if it's if I lose my job, I'm going to need a couple of months to find another one. So I better have a couple of months safety net. I wonder, do we know how much bigger it's got? I mean, I suspect it's quadrupled at least. Maybe we're now we're thinking 2 months isn't enough. Maybe we need to think a year.
Well, as you rightly say, with the Bank of England stats, I've seen them as well, that people are putting a lot more money in instantly accessible accounts. So current accounts or easy access accounts where you can literally take the money out overnight. And is that there because it's convenient? Yes. Is it there because people can rely on that pot to take it out within 24 hours if they need to? Yes. So I feel that people's habits have changed, and perhaps you've got those savers who were a little bit more savvy. They may be looking away from fixed accounts because they don't want their money locked down. They want it more accessible. So everyone's pooling this money into easily accessible accounts so that they have got that safety net.
And this research is also suggesting that younger people are listening to their elders a bit more. So they're taking advice, because it is a bit of an old-fashioned idea, isn't it? Rather than just spending what you've got, actually saving it for a rainy day. I mean, that advice is as old as the sun.
Yeah, no, absolutely. Yeah. So 3/4 of under 35s, that's 75%. So they're actually open to or take on board advice from their other family. And around half of over 45s actually said that they hadn't shared tips with the younger generation because they didn't feel it was their place to do so. So you have two sides. You have the older generation who may have very good budgeting tips and give some life lessons down, but they don't feel it's their place. And you have the young who want to learn, and they perhaps want to share off their own knowledge about, say, financial banking apps and things like that.
Yeah. I was thinking about this. I was thinking, am I going to listen to my mum? Would I take financial advice from mum? When you're elders, and then I was thinking, well, actually, no, when you're talking about elders, you're actually probably listening, you're talking about people listening to me giving advice. Because, I mean, there is a cut-off point, isn't it? When the older person starts talking about farthings and shillings and halfpennies, then probably their advice is not quite as useful. But I take your point that younger people are shifting their opinion. And is it because we've been, since the 80s, the focus has been on debt, hasn't it? The idea that you spend, get the debt, and then pay back the debt. In fact, we've been conditioned to think about that ever since we started paying student loans out. So people start with debt. So I wonder whether this is a long-term shift, whether people will actually start thinking, well, okay, we'll buy the house later, we'll save up more, we'll put a bigger deposit. That's the old-fashioned way of thinking. Do you think the shift is as fundamental as all that?
I hope that the shift will be. And again, I hope it comes back to putting financial education into the curriculum more so than we've ever been able to see. Because I feel that if you learn about the value of money at a younger age, you are going to have a better prospect for the future. And again, no one knows what's around the corner. But ultimately, if you can save now now and budget now will help. But as you rightly say, it's a difficult one, because everyone from different walks of life is going to have their own opinion of money, and people who have credit may not see credit as a bad thing if they can make sure that they borrow and pay it back. And that's the culture we need to shift from. We need to shift from a culture of I'll borrow now and worry about it later to I'll borrow now, but I have to fix my monthly repayments. I'll borrow now my mortgage, but I have to see if I can overpay and reduce the term of my mortgage, ultimately paying less in interest. So that's the culture we need to move towards.
Yeah. That's not what Andy Haldane wants, of course. When he started talking about the coiled spring, he wants us to get that money and get back into debt, because that's in effect is bringing that spending forward. That's going to help the economy. If we start telling people to behave like they used to in the olden days, that's going to slow down growth.
Well, this is the thing. Growth is very important as well. So it's again changing the mindset, but not everyone's going to move down that path. There'll be people who have been furloughed, people who have lost their jobs, and they haven't had the money to save. They've had to borrow. So again, that's going to change the mindset of those people. So we have got a split down the country of people who have perhaps been better off over the past year, and those who have never been in such a situation as this and don't really know where to turn. But that's why it's important to use free websites and services to try and get a little bit of advice or seek debt advice now, rather than just putting it off. Because if you make those small changes, you can really change the next, say, 3 to 6 months of this year. You can make it much more optimistic for you.
But if we, those people who have managed to save, if we did start spending, if we did use that coiled spring, I mean, that would help that other half of the population, because it would bring some of their jobs back.
Oh, for sure. But we have to obviously keep a little bit grounded when it comes to the spending. We need to make sure that there's not an absolute splurge, because people will just end up rubber banding back to the situation of not having a safety net, not having 3 to 6 months to cover those essential outgoings. So we need to keep a little bit grounded. And as I say, be optimistic, yes, but also just be mindful that we don't know if we're going to get a second coronavirus pandemic. We just don't know. Nobody could have even thought what we had over the past year. So we just have to be a bit sensible about it, I think.
That is exactly it, isn't it? We were complacent because we'd never seen anything like this before in our lifetime, and now we are all questioning, well, what if this happens again? Hence the idea that we're building up the buffer. The other thing that we're doing is that it's not just savings, we've been paying down our debt as well. So the household debt to income ratio, so in other words, disposable income ratio, in other words, how much we owe versus how much we've actually got coming in that's available for us to spend. In 2007, just before the global financial crisis, it was up to 150%. It started to fall, so we were shocked by that. We deleveraged because of the shock of the financial crisis. It was down to 132% in mid-2017. Last year, I'm sure it's gone down even lower now. It got down below 128%. So even though we have very low interest rates, we are paying down our debt rather than taking out more debt. We are paying down our debt and saving money. So again, not necessarily great for the economy, but it is showing a big shift in attitude. It's happening at both ends, isn't it? Paying down debts, increasing savings.
Absolutely. And I think there's a lot more awareness with things like with credit cards and mortgages, where you can have a fixed repayment on a card. You can overpay your mortgage. And it's something that actively needs to be more vocalized, and people need to be a bit more wary of that. But ultimately, as you say, doing that will help the future, because you won't have those debts sitting over your head and then having to just keep moving them every so often to something else. You'll actually get in a better, more positive light when it comes to your finances overall.
So what do you think of this idea then that the government has of helping to support banks to issue 95% loans? That seems like a step in the wrong direction. That seems like we're taking things back to the way they were.
It is a tricky call, because you can see it from two different sides. I mean, what I would say, it's been a horrible year if you're a first-time buyer, because not only are interest rates at record lows, you would have seen a lot of the 5% deposit mortgages just disappear off the market. There was only a handful left, and they were only for certain people in certain skills in certain locations in the country. So anyone who had been savvy and raised that deposit for 5% and were ready to get on the property ladder before, say, house prices rose, couldn't. They literally didn't have an option. They'd have to double their deposit to 10% to even get there. So you have to think of the case of the first-time buyers are the lifeblood of the market. We need the market moving around. Ultimately, otherwise, they will have to just rent. And that's not that's not ideal for everybody. Not everyone wants to rent for the rest of their life. They want home ownership. They want to have something to maybe pass on to their children, or indeed they want some assets. So, it's not ideal for people who were prepared with that deposit to put down. But again, if you can raise more in deposit, that's actually better, because you'll find lower interest rates. You'll have less of a hit if property prices do indeed shift, and you can then avoid the negative equity situation.
It's interesting how we treat debt and savings as though they're two different things, whereas in reality, if you've increased, you can increase your savings by having less debt, and vice versa. And there was and I think it happened here, but not in a big way. But I spent most of my life living in Australia, and offset mortgages were huge there. So you would take out debt, you take out a mortgage, you'd overpay your mortgage, but you could access that money that you overpaid. So basically you were paying down the capital with your savings were being used to pay down the capital on your property. If you needed that money for a rainy day, then you could access it up to the point where you are still on the minimum plan to meet your 20 years or 25 years or whatever. Was that ever very big here? Because it seems like a really smart way of banks getting people to take out loans, but also encourage. It's a form of debt, but also a form of savings at the same time. See what I mean?
Yes, no, for sure. And I think the financial crash has something to say about offset mortgages, and obviously interest rates falling to crazy lows. But there are some offset mortgages still around on the market. They're just, again, as you say, they're not really talked about. There are options, but ultimately most people do, as you rightly say, treat their mortgage and savings separately. So they will have a savings pot, they will have a mortgage pot, but only if you have a lot of savings and you have a mortgage, overpaying your mortgage really is the most sensible method to do right now, because you're not going to be getting very much on your savings balance in terms of interest, but you are going to be charged that interest rate on your mortgage. So it's very much a case of having it all together and really realigning where your money is.
Yeah, well, see, that's what I can do. I can overpay my mortgage. It's a fixed rate mortgage, though, so I can only do it within the bounds that have been set by the bank. I can't overpay it by a tremendous amount. But also, I can't get that money back out again, which you can, of course, if you've got an offset mortgage. If I can build that buffer and then draw on it when I need to. I can't do that. I can just pay my mortgage off faster. So why did that disappear? Why is that not more common now? Because it seems like it's perfect for the time where people are wanting to build up that buffer, but also wanting to pay their mortgage off.
Well, lenders just change their deals from time to time. As we've seen the last 12 months, we saw a lot of high risk mortgages disappear off the market, and people changing eligibility criteria or income multiples, things like that. So financial crash was very similar. You would see a lot of the higher loan to value lending disappear, and interest rates change, and also features change. The features include offset mortgages. So we had things like the One Account, we had a few other providers offering them. And generally, if those top accounts that were around that people were, mindful of disappeared, there was very little option for other people to choose from. There are offset mortgages around, and you can find them just by doing a quick internet search. And there's calculators online as well, readily available. So for anyone keen on looking into it, you can actually work out with offset online calculators how much money you'd be better off by doing the switch to that. But you have to be mindful of the interest rates on the mortgage themselves that have the feature. Yeah,
exactly, because they will pay you, they'll charge you more for it, basically. Of course, it swings and roundabouts. Of course, banks will always charge you more if they can, won't they? It's in their DNA. But also, I guess the other thing as well, which is perhaps another reason why, and this will apply, this may apply to young people as well as middle-aged people, actually putting more money into your pension schemes. That might be another reason why this coiled spring might not unwind suddenly, as Andy Haldane's been predicting, because we might go, okay, well, we've got to save for the rainy day, and particularly got to start saving for our retirements as well.
No, absolutely. And I think the past years really highlighted retirement and the lack of funding for a more comfortable retirement. Like the last 12 months, we've seen a lot more equity release products launched onto the market, a lot more features. So clearly there's demand there by older borrowers trying to release money out of their homes, perhaps because they've reached that point where they've realised they don't have enough to afford the comfortable lifestyle that they were hoping to in their retirement. So again, that will only get passed on to the younger generations and kind of reassessing, really, have you put enough money in your pension? If not, you really need to start early. And that's the key, making sure that you start putting money in as soon as possible, making sure that you're putting in enough for your employer pension, for your employer to put so much into your pension. So it's not just a case of state pension stuff, it's personal pensions as well. It's important to look at all the options. And there's things like lifetime ISAs. Lifetime ISAs are now there where the government will give you some free money if you put something in for the next few years. So again, all these options are there for people, but it's having the money to put in the first place.
Look, Rachel, I suspect we are going to get to the tail end of this year and find that coiled spring hasn't happened, and that, you know, exactly what you're saying will happen, that we'll do things the old-fashioned way. We'll be so scared about the future now that we will save, we'll be reluctant to spend. And the only way we're really going to boost the economy is that helicopter money into people's bank accounts. You know, maybe we'll look at the US and say, maybe that's not such a bad idea. We need more stimulus. What do you reckon?
Well, we've also got the thought of the negative interest rates, and that could completely change banking as well. We could look at people with very high net worth balances. If they haven't split it down to different pots, they could be charged for having the money held with the institution. Yep. So all these things could happen over the next year. But as you're rightly saying, it's very much a case of they're going to be people that might have a spending surge, but only for a short time frame. I think generally people will become more grounded because of what's happened over the past year.
Yeah, good for them, good for their peace of mind. Maybe not quite so good for Andy Haldane or for the economy. We'll see what happens. Anyway, Rachel, thanks for coming on.
Thanks, Phil.
And before we go, let's have a look at some of the stories in the newspapers this morning. The Times says Brussels backs down on blockade in vaccines war with Britain. Well, I'm not sure that they were listening to what Ursula von der Leyen was saying later on yesterday. The Metro says, the headline, Macron, EU is to blame. We didn't go fast enough or strong enough on vaccines. French president praises US for shooting for the stars, but opts not to mention the UK. Well, of course he wouldn't. The Eye reveals UK vaccine plan for booster jab. They say that they've seen NHS board papers that suggest that in October this year, there's going to be a revaccination campaign to offer a booster jab shot to those who've already been immunised to protect them against newer strains of COVID-19. Well, let's hope we're not expecting that those booster jabs are going to come from AstraZeneca in Europe. Let's hope they're going to produce them locally. The Independent, the real cost of brand Rishi. Reporting how there's been a 25% increase in the Treasury's communications budget last year. He does seem to be appearing in a lot of very glossy, well-produced videos lately. And they say it sparks the question about Rishi Sunak's priorities. Well, we know what his priorities are. He wants to be the Prime Minister, obviously. And the current Prime Minister, meanwhile, is between a rock and a hard place on vaccine passports. The Daily Mail today says fury over COVID pub passports on phones, revealing a plan for a mobile app showing a proof of a jab or a negative test or immunity before you can get served. We talked about that yesterday, but it's still there today. The Guardian also follows that story. Pub check strategy to make young people seek the vaccine. But it sounds like Boris is not entirely behind this. Here he is yesterday talking about the idea of vaccine passports. It sounds like he's not totally behind it.
I think we need to think carefully about the issues. As I've said before, there are lots of difficult issues because there are some people who, who for medical reasons can't get a vaccination. Pregnant women can't get a vaccination at the moment. You know, you've got to be careful about how you do this, and you might need to. You might only be able to implement a thoroughgoing vaccination passport scheme, even if you wanted such a thing, in the context of when absolutely everybody had been offered a vaccine. So there are complexities, moral complexities, ethical problems that need to be addressed.
Yeah, it's going to happen though, isn't it? You can tell. Sooner rather than later, I suspect. That's it for today. Monday, shares with Rodney Hobson. He's going to be joining me also next week. Optimizing your online experience. If you run a business that has some sort of interaction online, that would be every business, wouldn't it? How do you make it better? Well, with data is the answer. More on that next week, plus whatever else comes along during the week. A short week next week, of course. Maybe we will have cleared the blockage in the Suez Canal by then. I just hope my outdoor pizza oven that I'm waiting for isn't sitting on board one of those ships that's waiting to get through the Suez. We're hanging out for that in our house, I tell you. Have a great weekend. We'll see you on Monday morning. Thanks for listening.
It's the Business with Phil Dobbie. Listen online at itsthe.business or wherever good